from calculations and collections to reporting and filing. Now, you may be wondering, why is a chief marketing officer talking to you about compliance? Well, one of the great joys and privileges of being the chief marketing officer is that I get to speak with prospects, customers, partners, even competitors. And over the past year and a half, I've had the chance to interview over 50 finance leaders directly, and we recently completed a survey of 500 financial leaders. And through these conversations, I've started to see a number of trends, and that's what I wanted to share with you today. It doesn't matter your stage of growth. It doesn't matter if you're an early stage company like Wild Alaskan or Buffer, if you're squarely in the middle of your growth cycle like Farmer's Dog and Misfits Market, or if you're later stage like Truebill or Tunnel Bear. No matter your stage of growth, it is never too early to be compliant. 3 in 4 businesses think that sales tax compliance is a top priority. In fact, one of the CFOs I talked to said in the first 90 days of his job, getting compliant was one of the 5 things that he had to do. Another CFO told me, we're going so fast, I know we're going to raise another round. I have to be compliant now in order to be ready for due diligence. And a third CFO told me not to go into doom and gloom, but he said, I could go to jail if I don't get this right. So it is never too early to be compliant. But unfortunately, the need to be compliant is also increasing. Sales tax is critical. Who thinks really about what states do with that sales tax revenue? States use that sales tax revenue to fund transportation, education, healthcare. But in the past year, the gap between what states are able to collect and what is actually owed is growing. We've seen a $46 billion decline in state sales tax revenue collection in 2020, and IDC estimates that there's actually a $700 billion gap between companies that should be collecting sales tax versus those that are actually filing and remitting their taxes. But at the same time, there's enormous growth in the internet economy. $700 billion in e-commerce sales in 2020, 32% year-over-year growth. So if you're sitting in the audience right now thinking, oh, that's okay, I'm not e-commerce, or it doesn't really matter to me, it's not a question of if you'll be audited, but when. And again, in terms of getting ahead of the game, don't wait for that audit to happen. Get ahead and prepare for your due diligence. But being compliant has never been harder than it is right now. You have to monitor Nexus. You have to understand your taxability rates. You have to understand who you're selling to and where they're located. And you have to monitor ongoing changes. Let's take a quick look at an example in Connecticut for SaaS. In Connecticut, SaaS for personal use is taxed at the full rate of other taxes in Connecticut. But SaaS tax for business use is only taxed at 1%. Let's imagine you're selling into Knoxville, Tennessee. Great, I know the person lives in Knoxville, Tennessee. I've got the right tax rate. Unfortunately, wrong. Most of the addresses in Knoxville, Tennessee actually fall outside of the tax jurisdiction of Knoxville and are actually a different tax rate. So knowing the actual address so you can get rooftop level accuracy is really important. If you're not collecting address in your checkout process right now, you might want to start doing that. And finally, it's not static. You might think, Sarah, no problem. I'm using some software. I've got a great controller. We've got this under control. There are over 500 changes in sales tax rules and rates every year. And it keeps magnifying. Just in this past year, there are even more substantial changes. Florida introduced an economic nexus law and a marketplace facilitator law. Maine and Wisconsin removed their economic threshold, and Colorado has added more home rule jurisdictions and rules. How do you keep on top of all of that? So what I heard from these interviews and our benchmark survey is that the first thing is that you need to know about Nexus. If this is a new term, don't worry, I'm going to tell you more in just a minute. The second thing is that you have to plan for compliance. Whether you're raising your Series A or you're getting ready for an acquisition, you need to think about all the different pieces that make up your compliance picture. And finally, you need to automate in advance. We've heard a lot about how to automate your growth across sales and marketing and other functions. It's time to help your finance team automate for growth as well. So let's dig into the first piece, knowing about economic nexus. A couple of conversations I want to highlight for you about what different finance leaders are saying and how onerous this process can be. One finance leader said it took 3 months to get out of arrears. And the real kicker is they couldn't start collecting until they were actually out of arrears. So their business was kind of halted until they could get compliant. Another VP of finance told me that he went through the process of understanding where they had to pay tax, started to fill out the voluntary disclosure forms. It took him 8 months. He's like, how many times do I have to ask you to give you my money? And finally, it's this feeling of like, why wasn't anyone upfront with me? I mean, I met with some tax consultants, I met with some advisors. Nobody told me how hard this might be. And that's because it's so complex. Let's look at SaaS just for example. SaaS is taxable in 23 states, but it varies in every state. Some states consider SaaS a service and tax it as such, like Arizona. Other states consider SaaS to be software, a tangible good, like Washington State. The tax rates vary in each place, and again, this map is always changing. Now, even if you understood what your tax rate is for your software, what about economic nexus? Now, if you started your business prior to 2018, you're probably only thinking about physical nexus, right? Where do I have an office? Where do I have employees? Maybe even where do I have servers? Since the Wayfair versus South Dakota Supreme Court case in 2018, there's been the establishment of economic nexus, which means that you have a certain amount of sales or transactions you owe tax in that state. And just like the sales tax rates, economic nexus, varies state by state. Let's do a quick little deep dive here. In the great state of California here, if you have $500,000 in gross revenue sales in the previous or current calendar year, you've hit economic nexus. If you're also selling into our favorite state of Connecticut, though, the threshold's $100,000 a year in gross revenue and 200 individual transactions in the previous year. But in Illinois, it's another scenario. In Illinois, it's $100,000 in gross revenue or 200 separate transactions. Keeping on top of all of these different qualification criteria, and remember, as I mentioned, it's changing. You know, Maine and Wisconsin just changed their economic nexus thresholds in the past year. So it's really important to understand where you have nexus today and also keep monitoring it. And once you know that you have nexus, you've got to kind of get into the sales tax life cycle. You got to start collecting, calculating, reporting, and then filing and remitting. So I'm not just here to share, make you worried, but give you some tangible tips. If you haven't yet, I recommend you do a nexus study. This is a great time to meet with a tax advisor and a partner to help you figure out the particular nuances of your business. And again, things are constantly changing. Digital goods, streaming content, states are looking for more opportunities for revenue, as we first discussed. So it's a great time to understand where you have nexus and where you're approaching nexus with that amazing growth that you have. All right, Sarah, great. We got our nexus covered. I'm done. I can set it and forget it, right? Wrong. You got to plan for these changes. You got to, the same way you're planning for the changes in your business as it grows, you got to plan for compliance changes along the way. Keeping pace with this digital economy means ever-changing taxability, and it means stress on your finance team. 88% of the finance leaders that I spoke with said that they have at least one major challenge a year, and most actually have multiple challenges concurrently. And some of these challenges include understanding state registrations, actually integrating all of your data sources across your billing and payments and subscription platforms, maybe also integrating an ERP. How do you bring all of that data into one view to fully understand your sales tax liability? And as we just talked about, understanding physical and economic nexus, monitoring it, getting ahead of those changing qualification criteria, and then monitoring and registering. So I really recommend that you make a plan for compliance changes at each one of your business milestones. Start with your sales growth. We've talked a lot about how much are you going to grow your revenue this year and next year. But when you do that, it is time for a regular review of where you're selling into to understand if there are different compliance and liabilities in that jurisdiction. The second piece is launching in new markets or launching new products. Remember that Connecticut example where SaaS is taxed differently if it's for personal use or for business use? If you're starting to think about adding in something in your product line so your product line can be both B2B and B2C, it's time to review your compliance. If you're starting to think about selling cross-border, I remember Vimeo's example yesterday of how much of their revenue comes from outside the US. You have to understand what the sales tax implications are for cross-border sales. New employees, new offices, continuing remote work, that'll impact your physical presence. The fourth one is legislative changes. Now, I'm not saying that you have to go monitor all 500 state changes every year, but when there are landmark pieces of legislation or major changes like the ones that have happened in Florida or Colorado, that's a good time to kind of check back in with your finance and your revenue team. And finally, what I think you guys are all thinking a lot about is fundraising and acquisition. You want to be prepared for due diligence. You want to have all of your compliance data ready and be able to add it to your data room. You don't want to be sweating it. And so with that, we recommend that you do a compliance health check. Schedule this. Make a plan to regularly review and update your compliance requirements and positioning. And each time you're getting ready for one of those business milestones, when you're planning your sales growth and your marketing tactics, plan your compliance tactics too. Again, remember, I'm the marketing leader telling you to plan for compliance. And finally, let's talk a little bit about automation. So we've got our nexus figured out. We're thinking forward. We're thinking forward about how to be compliant as we grow. Let's make it easier on our teams to do so. One of the things I heard from a finance leader was they wanted to help their team be more efficient, right? Their controller just wanted everything automated. Pull in all my transactions from my ERP, pull in all my transactions from my e-commerce or my billing or payments platform, and just take care of it for us. Another finance leader said, I want to know that once I institute some technology, that it's going to help me from this day and every day going forward. And there are a couple different ways that you can make this happen. I think it really comes to leveraging technology and your team. Your internal finance team, maybe it's one person today, maybe it's a part-time controller, but as you grow, you want your finance team to have some general knowledge of sales tax compliance and liability and general understanding, keeping up, maybe helping lead those compliance check-ins. You're going to want to leverage tax consultants, whether it's one of the big four firms or other tax consultants like Tax Matrix and Cherry Becker to help you understand the nuances of your business. Again, I am not a sales tax expert. I'm giving you general education and advice. And if you need really specific counsel, that's the time to leverage the expertise of a tax advisor and consultant. And then finally, leveraging an automation platform to help you stay compliant once you go through all those steps and help automate the process, making sure that you never miss a deadline, making sure you have all the reports and information you need when you're getting ready for that due diligence. And we know that automation creates efficiency, right? That's not a surprise. We've been talking about that with our sales teams. We've been talking about that with our marketing teams. Same thing for finance leaders. 70% of finance leaders use automation software to be more efficient. Why not help them get out of spreadsheets? Why not help them reduce errors and manual processes? We've seen some of our customers at TaxStar actually save 40 hours a month by moving to automation and stopping doing things manually. But even better than that efficiency, and this is something I really love, is that idea of confidence. 64% of those who use automation are more confident and more prepared. Again, when you're thinking about that moment when you're going into building out your data room, getting ready for due diligence and your next fundraise, wouldn't it be nice if your CFO showed up to the table and just said, here you go, I got this, and wasn't sweating it? Let's help them help us all grow. And so with that, I wanted to make sure that you have a couple quick tools when you're thinking about beginning to use an automation platform for sales tax compliance. A couple of quick things. 84% of the survey respondents said that they wanted software that was secure, that had key integrations, and stayed up to date on sales tax legislation. Obviously, system reliability and security is huge. In terms of staying up to date on sales tax rates, things to ask: do you have a dedicated tax research team? When information is updated, is it automatically distributed? Is it a SaaS platform so you automatically are able to take advantage? You don't have to do software updates. Third thing, do you have smart product tax categorization? So is the software tool using machine learning and AI to help match your product to the right product tax code? Again, if some of you might have SaaS models where it's considered more of a service, maybe it's learning technology, there are a lot of nuances. Streaming content is starting to get a whole new glance at certain states, thinking about how to capitalize on all of those new streaming services out there. So how can we help match you to the right product tax code? The fourth one is making sure that the platform is API driven and is flexible. It can actually integrate directly into the billing and payments platforms that you're using, but also allows you some customization. Maybe you have a homegrown solution in your app that you need to integrate with. And we all know how much documentation matters. So it's not just the breadth of integrations, but making sure those integrations are really well documented and maintained. And number 5, easy to use reporting. Again, if we're making this all about your finance leader and helping you scale, you want to make sure that your reporting is easy to use, you can drill down from state to jurisdiction level, and that you can also do transaction by transaction search. Finally, automated filing. Wouldn't it be nice to not worry about, did I have to file monthly or quarterly? Did I get it submitted on time? To know when the filing date's approaching, quickly review the report and see it automatically filed with the amount remitted as well. And finally, those Nexus threshold indicators. A great piece of automation software will be predicting for you when you're about to hit one of those Nexus thresholds. And it's going to make sure that you understand the difference state by state, like we first talked about with the differences between Illinois, Connecticut, California. So make sure that you have indicators of when you're approaching Nexus. And finally, a great automation tool is also supported by a great team. So making sure that there's great documentation, self-service knowledge base, live chat, and human support too. Tax is complicated, right? 11,000 jurisdictions, 3,000 product tax codes, always changing rules and rates. Sometimes we need a little extra support. So in quick conclusion, I wanted to leave you with a couple takeaways. First and foremost, go ahead, geek out a little bit. Invest in understanding your taxability and where you have economic nexus. Second, create a plan to stay compliant at each stage of your growth. The same way you're thinking about your revenue model or you're thinking about your team growth model, you should be thinking about compliance and have that as part of your checklist for each stage of your growth. And be prepared for due diligence and be prepared for audits. Don't be scared by them. Acknowledge that they're gonna come. And finally, leverage experts and technology. It's really the marriage of both that helps you stay compliant. And leverage those automation tools to take some of the onerous work off of your plate